Hello, welcome to Real Vision versus Defiant, our weekly take on the big stories that are going on in the news. And this week, I don't have one of my enormously long-winded intros because my hand, like a monkey, was firmly in the cookie jar of the Border Yacht Club and the imminent launch of Other Side. So we will get straight down to business. Welcome, Ash Bennington. Welcome, Camila Russo, once again to discuss the hot stories. Camila, I want to go to you first. Elon Musk dominating the conversation. What do you make of
As
this
always.
story? Is it actually going to happen? That's the question.
It looks like it's going to happen. I think it's a done deal. I don't know if what else is kind of if we need to wait for final approvals or so on. But it looks like Twitter is accepting his 44 billion bid to buy the company, which is crazy. Like when the announcement first came out, a lot of people just thought this was a bluff or he was joking or, there was this, the bid was for 54.2 a share. So it looked like a bit of a joke, but he was serious. And it looks like it's happening. Twitter stock is up and, funnily enough, Dogecoin was up as well. I just got a PR pitch yesterday saying Google searches for how to buy Dogecoin spiked at the same time that Elon Musk made the bid for Twitter. So I don't know. That's just Doge being the Doge attached to Elon. But I think like the bigger picture here is the reason why Elon said he's buying Twitter. And it's about free speech. So he sent a letter and he said, I want to make Twitter a better platform where there is less censorship, less restrictions on what people can and can't say. And he wants to champion free speech. And this kind of unleashed this flood of obviously debate on the platform itself from people who supported his stance, people against it, saying, well, free speech is great, but it needs to be limited because there is a lot of misinformation happening. There's hate speech, so there's this sense of you can't be tolerant to intolerance is kind of this way of counter arguing what Elon Musk is saying. And then there's this third argument which says, okay, free speech is great, like we want more free speech on Twitter, but the fact that there's a billionaire owning a huge communications platform is problematic. Maybe something as big as Twitter should be controlled by, ideally, it should be a protocol. It should be more decentralized. It shouldn't be owned by a single person. So I think like those are the main three takes I've seen on this.
Ash, how did you see this one?
Yeah, I think Cami, as usual, is spot on here. It does appear that it's going to go through. I suppose there could be some sort of regulatory rejection, but that seems relatively unlikely here. The bid has been accepted by Twitter, so it looks like we're moving forward. Look, I think this is incredibly interesting. Twitter has, I'm a big fan of the platform, but it has sort of stagnated somewhat from a features perspective. And there are these really interesting questions about free speech. Cami sort of points out this idea of the debate that's happening, and it's 2022. So like everything else, it's highly politicized. But look, I think there's a really distinct difference between harassment on the one hand and open platforms for the free exchange of ideas. Look, you could get arrested for harassment in 1987. No one is arguing that the kind of really egregious harassment should be permitted to go on. But look, we have to be honest, Twitter has had some challenges with this in the past. They censored one of the largest newspapers in the country, the New York Post, over a story about Hunter Biden's laptop. Now, look, you may not care about the Hunter Biden laptop story. I don't really care about the Hunter Biden laptop story. The New York Post may not be your cup of tea. But look, the reality is it's a very dangerous precedent to have platforms banning reputable news organizations. It turns out that story now is being covered by the Washington Post. Twitter later rescinded the New York Post's ban on the platform. But these are the kinds of questions that folks have about at least the way that was being enforced in the past. Moving forward, it may be different. Look, the reality is this argument may be politicized, but I have to tell you, no matter which side of the political spectrum you're on, whether you're a conservative or a progressive, I think it's reasonable to be concerned about the idea that reputable news outlets are getting censored on Twitter. And so it's going to be interesting to see what happens next. Obviously, the devil is in the details. I think Musk is saying all of the right things, again, but the challenge becomes execution. And once you find yourself holding the car keys for the platform, it's probably going to be more challenging than it appears from a distance.
I think one of the big ideas here is how much is a platform responsible for the content on it, and how much should the individual be responsible for the content that they consume? And that it really is the debate at the heart of all of this.
Yeah. But Robin, don't you think there's a distinction to be made, between, death threats on the one hand and then publishing news stories that you don't like on the other? And to me, those things are getting conflated together in this argument.
Yes, absolutely. And that really is the challenge for any protocol to say, yes, we're decentralized, any platform to say we support free speech. What is free speech? Donald Trump has said, no, I'm not coming back to Twitter because I'm on Truth Social and that's my platform and I'm staying there. I don't know how you do this. What I do know is that it's quite possible that we'll see Dogecoin become the official coin of Twitter.
Hey, Robin, one note. Truth Social is built on Mastodon, which, of course, is an open source Twitter alternative. Really interesting, I think, just from a technical perspective, whatever you think of the politics.
Absolutely.
Oh, that's the other thing to point out. Elon Musk said, one of the main things he plans to do is open source the Twitter algorithm and code. So I thought that was kind of an interesting piece to this as well.
Yeah, there have been attempts to create a decentralized social media, and one of the key things is open sourcing the social graph, so you can see exactly what's going on and you can see how filter bubbles form and then do something different with them. I think it's going to be really interesting. The other interesting part of this is that one of the kind of great pantomime villains of the crypto space, Justin Sun, as he wants to do, thrust himself firmly into the spotlight by offering to outbid Elon Musk to buy Twitter at $60 a share. Justin Sun, who now goes by the moniker His Excellence because he is a plenipotentiary for Grenada. He's an emissary to the World Trade Organization resident in Grenada. I wonder why he did that. And he attempted to outbid Elon. But in the process, he's also trying to launch a stablecoin. And I did you catch that story, Cami, how Justin Sun is doing this decentralized algorithmic stablecoin called USDD?
USDD, of course.
Well, it's actually USDD, but it's USDD. Yeah.
Yeah, USDD. I think, on just like taking his plans at face value, they are interesting, right? It's a plan to create an algorithmic stablecoin based on TRX, or backed by TRX, I should say. That's the Tron blockchain's native cryptocurrency. And it's this attempt at having a self-sovereign stablecoin for the Tron blockchain. And it raised some eyebrows because it's how it works. It's pretty close, or even maybe identical to how the UST, the Terra's stablecoin works. It's UST is backed by Luna, USDD is backed by TRX. It works in this mint and burn mechanism to hold the $1 peg. It's pretty much, copy paste, which is kind of Justin Tron's modus operandi. Like, it's how he works. It's become an ongoing joke on how he just like blatantly copies everything. But it's it was interesting to see Do Kwon's Terra co-founder, or founder, I should say, his response to this, and he was like all for it. He was like, you know what? The more algorithmic stablecoins there are, the more self-sovereign stablecoins for each blockchain there are, the better it is for UST. Like it just legitimizes this this method, this way of building stablecoins. So that was an interesting take. Yeah, we'll see. I think people were also calling for Justin Sun to add Bitcoin as a reserve in the same way that UST has done. So yeah, maybe, I don't know, like maybe it works out and it's a way to legitimize algorithmic stablecoins, but I don't know if like Justin Sun's involvement in anything has served to legitimize things. We'll see how it plays out.
There is a fascinating Verge article all about Justin that I recommend everyone read, because if any of it's true, holy moly. Ash, I saw you smiling as I was setting this one up. What's your take?
Of all the sort of many subtopics we have in digital assets and crypto, algorithmic stablecoins may be the one that I'm most naturally, biologically almost skeptical about, which isn't to say that it can't work. I just get a little bit skeptical when I hear, the terminology that gets employed. You hear about things like, flexible supply and burning and minting. For anyone who knows a little bit about the history of traditional currency pegs and how traditional currency pegs have broken in the past, I think I have that sort of residual concern. I know Cami knows about this from covering emerging markets. This is something that we've seen before in the non-decentralized world, and it's been challenging. Not to say that we're not going to figure out how to do it, but I think there are real constraints around it, and I think there are significant challenges. And ultimately, whenever I hear about an algorithmic stablecoin, they're exciting. The technology is really cool, but I guess the most definitive thing that I would be comfortable saying is very, 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 very early.
Well, it's interesting. There's so many talking points here. You talked about the peg here. Luna and UST actually broke in spring of last year. And the way they broke was that Luna suffered a catastrophic loss in value. And everyone was trying to escape back to UST. So you burn the Luna and you get UST. But the redemptions were only able to manage, I think it was $20 million at a 2% spread. And the system simply couldn't handle it. And so the UST peg broke. They actually retooled the system, but this is hard coded into the contract. So if it happens in real time, you can't do anything about it. They have retooled that now. Nowhere on this Tron USDD do I see anything about that. What I do see, though, is the promise of a 30% fixed rate of interest on stablecoin deposits. So Anchor Protocol is the big kind of headline marquee act on the Terra network. 20% fixed rate of interest on stablecoin deposits paid out in stablecoins. This is monster if you're a whale and you just want to park safe capital in this protocol. Justin Sun is attempting to create what I guess is an introductory offer of 30% on stablecoins. You just imagine having money parked in your bank paying out 30%. Now, obviously, this is not sustainable. He's put together a $10 billion reserve of what he calls highly liquid assets raised from initiators of the blockchain industry. Nowhere is it said who these people are. How can we trust them? Do we know where is this reserve? No transparency whatsoever. And yet he calls this the most decentralized stablecoin in history. There's so much BS floating around this, so much Justin speak, that it's hard to know where to look. On the Do Kwon angle on this, Do has become highly politicized himself in recent weeks, acting against MakerDAO. He said, DAI will die by my hand. And so what I think is going on here is he's co-opting other stablecoin providers to create stronger and stronger pools of alternative stablecoins that will drain liquidity from the DAI pool and eventually kill MakerDAO. It's full on soap opera, but that is why I think Do Kwon is in, at least in public, quite kind of friendly towards Tron. And if Tron fails, then it will just prove that UST is the better product anyway. So much going on here, and it's just classic Justin, just wading in, trying to insert his face into the conversation wherever he can. I mean, you got to love it. Like we lack pantomime villains at the moment. They all kind of disappeared, but Justin is still there doing his thing.
Robin, you have a mustache for it.
I have the mustache for it. Well, when November rolls around, I will step in and be that role. I'll start wearing smoking jackets and holding a cat. We'll do that. You heard it here first. Shall we move on to our next story? We were talking about Proof last week, and it seems that a whole bunch of new liquidity has entered our favorite NFT market. Some NFTs have been soaring, others have been absolutely spanked to the floor. But Cami, with a week's kind of rest to look more closely at this, I know there's some interesting news around Mr. Carson and Proof, but have you had a chance to look further and think about this one?
You know, about like moonbirds and like just it's, you know, to me it's still so surprising how these projects are taking off, raking in millions and millions in sales, and just like bringing the entire NFT market up with them. So let's see, there, you know, like NFT like volumes are still holding up amid this bear market in just like in the general cryptocurrency space. In April, there was 17.6 billion in sales volume in the NFT market, and this was down a bit from March, which had 20 billion in volume, but it's a pretty kind of small dip if you just like consider the context of things where the entire market is diving. So I think, you know, it's just like a really strong performance still for NFTs, and it is being driven by projects like Moonbirds, probably like Akutars is probably, you know, they'll drive more volume and more sales to the market. And, you know, meanwhile, you see things like Ryan Carson, one of the founders or I guess like operators behind Moonbirds, leave the project pretty much, you know, just like about a week after it was launched. So it's just like, for me, the NFT market is very hard to make sense of it. It seems like very irrational. Just like these huge sales, like floor spiking. I think like Moonbirds had over like 30 ETH floor at some point. I don't know where it is at this moment, but and remember, like we talked about last week, this was because of the people that were backing it, and then like one of the main backers you know, leaves the project a week later. So I don't know, it's just a little bit kind of befuddling, I guess.
So Cami, there's basically a stratification of NFT buyers. There are the lower level retail who try to buy the cheap ones and then flip them and get their way up, and then there are the kind of what I would call art-loving whales who are still clinging on to their one-of-ones from the super rare Nifty Gateway days, who are hoping for a return of the good times in the art market, but are also buying NFTs of a certain size, but one of them to bank and keep it for another time. And then there are the aggressive sharks who just buy up, you know, 100 of a project and then flip them really fast. What's interesting though is just the way the volume has kind of focused in on particular projects. Like Proof just sucked all the liquidity out of the market, and now we're seeing ApeCoin and Bored Apes and that whole ecosystem sucking the liquidity out of the market, and it's just destroying all the mid and lower tier projects, apart from a handful. So it's really a kind of asymmetric volume profile at the moment, which is why on the raw numbers look good, but actually the spread and the distribution is not so good.
If I can be a little bit kind of self-promotional here, to me it's just like I see all these like projects taking off with not much substance there, and you know, I have this like also like my own NFT project with the Infinite Machine movie, which we're trying to fund with NFTs. We announced that Ridley Scott and his Scott Free production company will be co-producing the movie. And, you know, of course, I'm extremely biased. Like, this is the project I'm leading. But for me, like, the Infinite Machine collection is like a beautiful NFT project. Like, it's funding something real, tangible, a big Hollywood film about the story of Ethereum. It has 36 artists from emerging countries coming together to make the art. There's royalties going to these artists and to the community, and that's kind of fixed in the smart contracts in perpetuity. So it, you know, for me, it's like we try to make it like really legit, and it's good. You know, it's hanging in there. It's not doing badly, but nothing like the 30 ETH floors that something like pixelated birds fetch. So to me, there's like a disconnect between kind of what's real, what's not real, what's hype, and what's not. And to me, it's like honestly a shame. Like NFTs are such an important primitive, like, and I don't like that word, but just like tool, basic tool for the crypto ecosystem. And right now it's just being inflated to death, like by all these like hype projects.
I'm super interested to see anything that Cami is working on because she watches the entire space, watches everyone else's missteps and successes. So I'm super curious to see what's going in to this NFT.
Well, it's significant because as a filmmaker, I grew up watching the films of Ridley Scott. I know every film he made between like 1977 and 1995, like off the back of my hand. You know, like Ridley Scott is the OG of OGs. He's incredible, and he's still kicking ass at like, you know, well into his. It's like nearly 80, I think. Amazing, Cami. Congratulations, Ridley Scott, RSA.
Thank you.
That's legit. That's genuinely legit. And speaking of things that are also legit, I'll bring up my Aku again. Like I was waxing lyrical about Michael Johnson and Akutar, and I think we all agree that this is an honorable human being that's trying to do something really meaningful and different. And it got screwed up so bad, so bad. We'll just put a number out there: $34 million gone. Can you take us through this one, Cami?
Yeah, I think, of course, like $34 million gone. That's terrible. But to me, what makes it a bit worse is that it could have been avoided. So what happened here is that, you know, the Akutar's project, we've covered this before, but it's a really beautiful project by Micah Johnson, this Major League Baseball player who has this character about a kid that wants to be an astronaut, and this like really cute NFTs linked to them. They're just lovely. They're beautiful art pieces of art. And so there was a mint happening where 15,000 of these characters, Akutars, were being created. In the lead up to this, somebody from the community alerted to a potential exploit in the code. And the team looked into it and said everything was fine, and kind of dismissed it. Said, no, you know, there's safeguards around this, like everything's gonna be okay. And you know, it wasn't. And that same piece of code that this community member alerted to was in fact exploited. And the hacker, I think, didn't actually mean to lock $34 million in the contracts. So this word is a bit confusing. So the hacker kind of exploited the you know, the fault in the code. 34 million was locked, and then he was like, if the Akutar team admits its mistake and admits that there was an exploit, then I will unlock or, you know, unlock the hack. And so they did, but then he wasn't able to fix the problem. In the end, you know, the project did go through. The mint happened anyways. The 15,000 got dropped to holders, and I think some buyers are being refunded. So, you know, it has like a okay ending. But I think, like main lessons from this is projects really need to listen to their community. More importantly, I think, we've talked about this before, just how critical it is to have bug bounties, and really kind of healthy, large bounties, incentivizing white hat hackers or non-malicious hackers to look at the code, figure out if there's an exploit before deploying a contract. This on top of audits, of course, which I don't think this code had either. So, just one more hack to show that you really need to be extremely careful in this space, because a lot of money is on the line.
Yeah, it's a painful one, this one, because it's a project that I think everyone was rooting for and wanted to do well. The exploit itself, the hacker exploited it and then unlocked it. It was another fault that actually locked the ETH in the contract, and it can never be recovered. It's not like you can go in and figure something out and then get it out. No, it's gone.
Right.
It will never come back. And the refunds. So it was a descending Dutch auction, what they call a true Dutch auction. And so the price descends, and you commit a bid at a certain price. The lowest bid would then be the price that you paid. So there's a refund mechanism in place, and all of that is actually fantastic. It was just executed really, really, really badly. And I think you're right, Cami. When you're in that critical go, no go situation, no go, as bad as it looks, delaying is the right call, even if you're kind of 99% sure. What happened after that was that they completely recoded the airdrop contract. There was someone from a completely other team that did it for free in 24 hours, completely architected it from scratch, and it went very, very smoothly. But yeah, it sucks. It really sucks.
Yeah, and I think it's especially painful, I think, because Micah is one of the genuinely best respected and most liked people in the space, and it's your heart goes out to him when you see a project like this. Look, I think Cami made some important points, particularly around code audits and bug bounties, but this just speaks to this sort of the general level of overall developmental maturity in the space and how these things get done. I think that what we're going to see in the future is going to be some of these best practices becoming more standard, and a mechanism in place to evaluate them. So, this is something that we have some experience with in the open source software development side, and even indeed on the closed source software development side, where you see things like APIs where there are bug bounties. But the reality is that this represents a shift in the way that people are going to need to think about these things. Things like code reuse, code audits, automated testing, bug bounties. To people who are software engineers, these are terms they're all very familiar. But finding a way to bring these best practices into our space in a way that they can be consistently evaluated and that there can be transparency ultimately for the people who are the consumers of the products, meaning the people who are buying the NFTs. So you understand what you're investing in is something that is going to be, I think, absolutely critical to making this space more mature, secure, and trusted. But it takes time to get there. This is a culture of evolution. And I suspect, unfortunately, that this isn't the last conversation we're going to be having about this type of exploit.
Yes. Well, the good thing is that it probably won't take that long to make back $34 million in secondary sales on a collection of 15,000. So there's a silver lining there. But another silver lining that we wanted to talk about was it's airdrop season. It might well soon be layer 2 airdrop season, with one of the kind of most hyped layer 2s, Optimism, launching a retroactive drop with its OP token. Cami, I know you were keen to talk about this one.
Yeah, I think it's interesting to see airdrops kind of returning, like making new headlines. I don't think we had seen kind of a big airdrop like this in a while. And it just like puts layer 2s in the forefront again. And in this case, Optimism, the scaling solution for Ethereum using optimistic rollups, they have been live for a few months now. They kind of rolled out in phases with just kind of this very simple like transfer mechanism, and recently they included a computation to the platform. So it's being used by find more projects now. And so with increased use, an airdrop makes sense to reward users of their platform, and also incentivize increased use. So I think, interesting about this airdrop, it was, retroactive, like we've seen, what's become so common so far, rewarding past users. But something that's maybe a little bit different, it's like combining airdrops with liquidity mining, maybe. This will be an ongoing airdrop. So they've airdropped past users, but they will continue airdropping OP tokens to future users of the platform going forward. So I believe they've dropped 5% of OP total supply, and they have, where was it? I think it was like 15% or so of total supply allocated for kind of this airdrop, for the community using optimism. And so, this points to what's next. I think kind of in the horizon is potentially Arbitrum is the other Ethereum scaling solution that doesn't have a token, that people might kind of be speculating that they will launch a token. In the end, it's like for all these projects without a token, I think kind of the pressure becomes large enough that in the end, they are kind of forced to give that ownership and incentive to their communities, and that's what we're seeing with optimism. A final piece to point out is this. There's this kind of innovation in governance as well. They have this something called Optimism Collective, which is a bicameral, like two groups within its governance system. One is controlled by the Optimism token, the other one isn't. So that'll be interesting to see how that develops. Like the token based governance will control some kind of pieces of operations, and then there will be a foundation controlling the other piece, with the intention down the line of fully decentralizing and dissolving the foundation, kind of like how Maker did. So I don't know, a lot of pieces. we continue seeing these kind of experiments in token distribution and governance.
Ash, does anyone care about layer twos outside of the inner circle of Ethereum from where you're sitting?
Well, they care when gas prices become exorbitant and make transactions that would otherwise be interesting economically infeasible. I think scaling is obviously a topic that we're going to hear more about, particularly as volume increases, and in fact, as the popularity of Ethereum and Ethereum-related protocols increase, you're going to see the necessity of figuring out ways to scale it. In terms of the airdrops and L2 solutions, I mean, it's kind of like chocolate and peanut butter. It's a little surprising that it took this long to come together, but clearly I suspect this is going to be something we're going to see more of in the future.
I've been keeping an eye out for what makes sense of all of this. And weirdly enough, I think it's wallets. So I've been kind of interacting with these protocols, and it sucks. Like MetaMask, basically it's a horrible user experience, but we all use it because we're kind of just stuck there. And what I'm kind of becoming more aware of is better wallets out there. They're not perfect. So wallets like XDeFi and Rabby are starting to make the experience of interacting with other networks more pleasurable, i.e. you go to an Avalanche protocol and your wallet instantly switches to Avalanche. Other things like you sign a transaction, it will give you much more information about what it is you're signing. It'll translate the contract into something you can actually read. And Ash, you were talking about greater transparency over what we're actually doing here. I think the wallet is the battleground for some kind of explosion in user experience, but also people being braver to try stuff out, because for the casual user, it just sucks. But when I look at what's possible on these other networks, there's just so much exciting stuff going on. Nobody apart from the big whales wants to go there. So when you track the whale wallets and see what they're doing, you go, this guy's making a fortune, but he's not doing anything particularly wild. He's just brave enough to go and try a different network. So I really feel like alongside these layer twos, we have to see a massive and rapid acceleration in the maturity of the wallet experience in general. And I'm really excited to see where that goes. I think someone's going to launch a fantastic wallet soon. I just don't know who that is.
Yeah, UI UX is a major constraint in the space. We talk about people like us who talk about it, and the fact that we're involved in the space. But the reality is, there are lots of people out there in the world who could be interested in this if the experience was simpler, more intuitive, more direct, and frankly, just more friendly to the users.
Talk about optimism. I think it's good to end on one last little note. Cami, what are you optimistic about for the weeks ahead?
Wow. Let's see. I'm optimistic. Well, I don't know if I'm optimistic about the crypto market. That's something I'm not very optimistic about. I am optimistic about just crypto innovation continuing to happen in spite of a very red and down market, as it always is. I'm also optimistic about our event at Colony, the Defiant headquarters in Brooklyn, in Dumbo, happening tomorrow. This is the second one we've had, conversations at Colony. So if you're in New York, come join us. So should be a good one. We'll have Tarun Chitra and Laura Shin in a panel with me.
Tarun is like, there's Galaxy Brain and there's Galaxy Brain. Tarun is just on another planet. And he has the wildest hair as well. Amazing dude. Ash, what are you optimistic about?
Robin, I'm really optimistic about pessimism. I think that we're going to continue to see more exploits, more novel mechanisms, more novel categories for exploits. We didn't get a chance to touch on Bored Apes, but probably an important story. The fraudulent mint with Bored Apes caused not by a flaw in the underlying code itself, but a flaw, or a hack, I should say, of their Instagram account. This sort of brings up a challenge that we probably haven't discussed enough, which is the ability for hackers to exploit related ancillary platforms in the Web 2 format and to misrepresent what's happening in a decentralized platform, and therefore to exploit it. This is a challenge that I think we're going to continue to see going forward. Actually, speaking of novel categories of exploits, we've covered three, I guess, here in the last two shows. Number one, we talked about the Beanstalk exploit, which was a governance exploit. Today we talked about the Aku exploit, which in fact was basically a burn mechanism, a break in the code, not a theft. And now we're talking about these Web 2 exploits, ancillary platform exploits that lead users to do things that they would not otherwise do, though there is no inherent exploit in the code or in the governance structure. This is going to take a long time to sort out, figuring out mechanisms and practices that allow users to understand what's truly happening on the platform and what's not. It's going to be a challenge. We're going to continue to see more challenges. Doesn't mean I'm not optimistic about this space in the long run, but I think we need to be realistic about the fact that we're probably going to have to fasten our seatbelts, a bumpy ride ahead.
The thing is, if you own, a $300,000, $400,000 asset and you don't look after it properly, then that's on you. I think really, if you own a Bored Ape and you're not like really geared into check Discord, check before you send, then you deserve to get wrecked, honestly. And that's a lesson you'll learn the hard way. But yeah, you needed to learn it. And that really gives me a chance to talk about the thing I'm optimistic about, which is the imminent launch of the Bored Apes other side, their metaverse. I had a chance to look into it properly this week. I think it's going to be phenomenal. It's a really fresh take on the metaverse. It's driven by storytelling, and it's going to, if they get it right, allow any NFT project to come and be a participant in this shared story creation. It's a big idea. I was massively skeptical about it, but I think I see where they're going with it, and I'm really excited about it in a way that I was not expecting to be. We'll deliver a video on Friday to explain why, but that is a fitting place to end it. Thank you so much for joining us, Ash. Thank you, Cami, as always. And for those who are part of the Aku family, welcome. It's not over. It'll be a fun ride to the moon. Thanks. See you next time.